Talking about technical tools, we have learned trend lines, support and resistances, chart patterns, bar patterns, and set of indicators. Now we will focus on some advanced tools. Well, there is nothing that can be termed advanced. It's actually the application, how you put them to use. This Fibonacci and divergence are quite popular terms, but amateurs either do not use them at all for trading purpose, and even if they do, by large they do not use it the right way. So in the coming sessions we will be discussing Fibonacci sequence, divergence trading, and relative strength comparative. So we'll start with the Fibonacci. Fibonacci numbers are a sequence of numbers named after Leonardo Fibonacci, an Italian mathematician. Technical analysis uses Fibonacci ratios to find potential support and resistance levels. The other use is to find out where prices could potentially move to, as in determination of price targets. It's a sequence where each succeeding number is the sum of two preceding numbers. The sequence is a series of numbers that starts with the pair 1, 1, which then continues as 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, and so on till infinite. So as I just mentioned, it's a sequence where each succeeding number is the sum of two preceding numbers. So adding 1 and 1 we get 2, adding 1 and 2 we get 3, adding 2 and 3 we get 5, and so on. Now barring first few numbers, any given number is approximately 1.618 times the preceding number, and any given number is approximately 0.618 times the following number. Again, barring first few numbers, the ratio 0.382 is found by dividing any number in the series by the number two places to the right, and its inverse results in the ratio 2.618. Again, barring first few numbers, the ratio 0.236 is found by dividing any number in the series by the number three places to the right, and its inverse results in the ratio 0.236. For example, if we consider the numbers 55 and 233, then 55 divided by 233 will result in 0.236, and 233 divided by 55 is going to result in 4.236. Now the ratios 0.786 and 1.27 are the square root of 0.618 and 1.618 respectively. Now given all the ratios, most widely used Fibonacci retracement levels are 38.2% and 61.8%. And most widely used Fibonacci expansion levels are 161.8% and 261.8%. Let us now understand how the levels can be put to use. Now both Fibonacci retracement and expansion levels finds for us potential support and resistance levels, but the use is completely different. Fibonacci retracement levels are used to create a position, and Fibonacci expansion levels are primarily used to liquidate a position. You also can certainly create a position using Fibonacci expansion levels if you want to trade aggressively. Let us now understand how to plot Fibonacci on a chart. Now this stock has been in an uptrend and undergoes a correction. Now standing here, when market has started to consolidate, we do know that this is a prominent swing low and this is a swing high. We require 2 points to plot Fibonacci. So we draw Fibonacci levels using this point here and this second point. Joining these 2 points throws certain Fibonacci retracement levels. So the stock can take support at any of these levels, which being 38.2, that's 50% and 61.8%. But which one is going to be the most likely level? This is really not easy to determine. Things look easy once price makes new high, leaving this spot behind, and then you realize that Fibonacci is working beautifully. But could you manage to take position? Now, this is the very reason I label this Fibonacci as an advanced tool. It's really not that tough to determine the levels of support or resistance, but having said that, it really is tricky. Price is very likely to find a support at any of these levels. Remember, these are popular levels. The levels are popular as most of the times price takes support or resists at these levels. Otherwise, we have another Fibonacci based level at 78.6. Okay, so how do we know the likeliness of a level turning out to be a true support? Now, the simplest trick is to watch out for confluence zone. Now, this confluence zone occurs when two or more strategies or methods, not necessarily independent, are used together to form a thorough opinion. So you may use Fibonacci and trend lines, Fibonacci with support and resistance lines, Fibonacci with an indicator, or else Fibonacci with another Fibonacci reading. You can use anything that has a logical deduction. Do not force a tool to give a reading that you would like. Never do that. Do not bring an element of bias. You will never succeed if you are biased. You must do what the chart says you to do. You are not making a chart to do what you want. Don't win that false impression. Market is an undisputed king and you are simply nothing. Now our motive is to assess a market situation in the best possible manner and then trade the same. Okay, so standing here, we have these three levels. Looking around this chart, we notice these points over here. We require minimum 2 points to draw a trend line to be of any use. So taking these 2 points, we draw the same and project into the future. This projection now creates a confluence zone. Certainly, we do not know today how price is going to behave this point onwards, but we do know that this area here is a high probability zone for the market to reverse and resume its uptrend. If you are looking for a confluence zone, then this level 38.2% over here looks to be of no use and we discard immediately. We are now left with 50% and 61.8% levels. Price can take support anywhere here, but still chance of striking 61.8% level is higher. Now let's understand why. This 50%, the midpoint level, stands a decent chance to act as a support as we have a previous point here where price did validly take support. And if we would have considered taking position, then it wasn't that badly judged. But this point, 61.8, would have been perfect. Now, why 61.8%? There are two additional reasons here. Barring this trend line projection, we have this little congestion that formed here, and this area merges with 61.8 levels. And also, if we draw a trend line joining the highs, we are getting an expanding pattern. So if this stock has to continue honoring this pattern, then chance is high that it will accordingly move lower towards this trend line. And see how this price correction fulfills every parameter here. Price eventually strikes this trend line, this expanding pattern is intact, and it strikes the 61.8 Fibonacci levels also, all same time. And this generates a lot of enthusiasm amongst buyers, and there is a turnaround. I'm not saying that price cannot rebound from 50% levels, it certainly can, but for me 61.8 is the level where I would have placed buy orders. Now let's understand this concept differently as to what causes this price to rebound sharply from this level. We certainly did ascertain this being a confluence zone. Now what this actually means? Now there are several trader groups in the market. Some are eyeing this Fibonacci level, some are eyeing this trend line in order to buy, some are waiting for this expanding pattern to complete. So these groups are looking at this chart their own ways, but they all are eyeing the same level, and the very reason price holds this level strongly enough and rallies sharply due to the presence of a naturally strong demand in this zone. And this is how you have to make Fibonacci levels to work in your favor. So we have taken a position in this stock at this Fibonacci level, but how do we liquidate? Fibonacci expansion levels helps you on this front. We need to have 3 reference points in order to project. 2 points are known to us. It's the same points that we used for plotting Fibonacci retracement levels. This swing low and this swing high. The third point is the latest swing low, this one here where this correction got over. Taking these 3 points, we get expansion levels. Here we have only one visible projection level, and that's 161.8%. Certainly the levels 261.8 and 423.6 lie beyond this level and are not visible on this chart, but you can see in this case how price hits this level 161.8% and stalls. Now if someone is fond of taking counter trend trades, then one may go short at these levels, but such trades are generally risky unless perfectly timed and combined with other technical parameters. So let's have a look at this chart here. Now this gold has been in a downtrend and gives a corrective rally. This here is a swing high and this is a swing low that is used for plotting Fibonacci. And we have the levels here. So considering the concept of confluence, this 61.8% over here doesn't look to be of any use, and we discard the same. We believe that if price has to resist, then it's going to be either at 50% mark or else 38.2%. If we look at earlier price behavior around this 50% mark, then we certainly see a lot of activity. Price persistently has been resisting here. But same is the case for 38.2 levels as well. Look here. Price has been holding around this region very well. And in this case it resisted very well. So both the levels 38.2 and 50 are important. But you know that the price is at least very unlikely to reach 61.8 levels. So this technique of confluence will certainly make your trading successful than before. But you must use other indicators or studies like candlestick or Elliott wave that will take you to a different level. Having knowledge of the same will enable you to decide between these 2 levels. Here we have an instance now on Fibonacci expansion, and this is gold again. With these 3 reference points over here, we have projection levels in place. See how the levels act as a strong resistance. If you initiated long position over here, then these are the levels you should be looking to square off. Over here and over here. So these 2 are primarily profit booking points. And remember, aggressive traders can certainly initiate a position here for small profits. Now before we close our discussion on this tool, there is something important you must realize. It isn't that price always stops at Fibonacci retracement and expansion levels. They certainly do on most occasions, but not always. Probability of price taking support or resisting at Fibonacci levels of retracement and expansion is very high. But after all, it's just a probability.